finance, a la shmup. What is market capitalization versus equity capitalization? All right, let's start with the math. Hair Extensions for Dogs, Inc. has 20 million shares outstanding and trades publicly at $30 a share. The stock market is paying that $30 a share for the company, so it is the market, the stock market, that is setting the price on the whole company. That is, for $30, you get 1/20 millionth of a company that has $30 million in earnings, no debt, and $200 million in cash. Well, all of it together comprises the total value of the company, so that's the market capitalization. Got it? Shares outstanding times stock price. Equity capitalization looks at cash and debt and sometimes other easily sellable assets it has on the balance sheet. But to keep things simple here, just imagine that Hair Extensions for Dogs, Inc. has a $600 million market cap, right? 20 million times $30, no debt, and it has $200 million of cash sitting in its Wells Fargo account. Well, the market cap is $600 million, but the equity cap is $400 million. Why? Well, if the company wanted, it could dividend out the $200 million of cash that it had tomorrow, or use it to buy back its own stock, or, well, whatever else it wants. Maybe throw a huge party. Maybe not. So the equity cap is $400 million. And this is an important number because with the company earning $30 million this year and say $40 million next year, on that $600 million number, well, it trades at 20 times this year's earnings and 15 times next year's. But that's its market cap. It's trading about where the overall stock market is trading, give or take. Not that cheap, not that expensive, kind of ho-hum. But if you back out the cash, the equity or earnings power of the company at just $400 million is trading at only 13 times this year's earnings and just 10 times next year's earnings. Cheap, really cheap relative to its growth rate. So maybe this company is a screaming buy and investors should really pay attention and the stock's cheap here. Buy, buy, buy. Well, the key takeaway is that the equity of a company in this sense is all about the earnings power that the company gets from its operations, not about its balance sheet. So as long as those poodle hair extensions keep flying off the shelves, well, things will be gravy, well, as far as you're concerned.